Hello, everyone. Welcome to Government Contractor Chat. I am Lindsay Riegelsberger, Director of Operations and Business Development for Streamline Government Contracts. Streamline helps small to mid-sized government contractors who seek experienced, effective support with contract management that reduces risks, increases profits, and enhances reputations. We do this by negotiating teaming agreements, subcontracts, preparing estimates of completion when necessary, and speaking to contracting officers in their own language. We are the proud organizers of Government Contractor Chat, and we thank you for joining us today. All right, everyone, it is time to welcome our guest speaker. Please welcome GovCon SME, Tony Worick.
Thank you, Lindsay. So as Lindsay mentioned, my name is Tony Worick. I am a partner at Capital Edge. I'm going to go through, I'll talk about the agenda here in a minute, but going to basically speak to you a little bit about who Capital Edge is, who we work with. But I'll start with a little bit of background on myself. Have been in the government contracts industry for the past 15 years or so, almost 20 years, really enabling businesses to do work with the government. So anything that touches federal funds through a contract, grant, other transaction agreement, we are there to help businesses comply with those requirements and also kind of look at indirect rate structures, business structure, and segment structure for optimization. I have been with Capital Edge for about 2 years, was previously with a couple of the big four firms, but still kind of continuing to focus on government contracts. Got my start in government contracts as more on the audit side and was performing DOE audits over contractors, incurred cost submissions, disclosure statements, etc. And then really moved into more of the advisory role for the last about 12, 13 years. So for the agenda, again, I'll talk a little bit more about Capital Edge, and then we'll get into a brief regulatory overview. There's a lot going on right now, so want to just do a summary of regulatory updates. Definitely won't have time to get into the details, but just kind of pointing out where those updates are coming from. And then we'll get into DCAA audit trends, relying very heavily on the DCAA report to Congress and what we see out of that. But then also, from my experience, what am I seeing across the contract base or the defense industrial base, and what does align with or does not necessarily align with what we're seeing from a trends perspective within the report to Congress. And then we'll talk a little bit about common findings, trends, and risk mitigation strategies. So at Capital Edge, our mission, sorry, I got one thing I gotta hide. Our mission is to position mission-driven teams for success in the moments that matter. So we are really here to enable success of your all businesses, whether that be through compliance or capabilities. It's identifying and understanding what those requirements are, and then what does it take to comply with those requirements and how to optimize in them. I oftentimes say, the federal acquisition regulation and the agency supplements, as well as the cost accounting standards that you'll hear me talk a lot about today, provide an excellent framework for operating a business efficiently and effectively. Every once in a while, it's within the enforcement that you get points of contention or disagreement in how you are complying. And that is oftentimes what we are brought in to help clients with, is just navigating that gray when the regulations aren't as clear or enforcement is not necessarily aligned with how you're running the business. The clients that we work with span across all government agencies, DoD or DOW, Department of Energy, Health and Human Services. So again, anything that receives federal funds, whether it be contracts, grants, agreements, we are there to help. As I talk through the regulatory overview, I will be discussing kind of what those risks look like from an audit perspective, as well as a regulatory perspective, as you move through different types of contracts and different agencies. So why Capital Edge? We are the largest, I would say, solely focused firm that is 100% on government contracts. It's not something we do. It is what we do, and it's all that we do. We do have about 50 or so people that are 100% focused on government contracts, and I'll get into a couple of the different specialties or areas of focus across the different teams that we have within Capital Edge. We are also very capable of plugging in quickly. I think I'll probably talk about this again as we get through things, but within government contracting, sometimes contractors are a little bit more reactive and they wait for audit findings to come to the table rather than being a little bit more proactive. So we'll talk about some of those proactive um, areas of where you can kind of mitigate risk ahead of it coming through an audit report. So who we are, just a little bit of a sense of what it is like to work with us. We are former industry leaders, ex-government auditors. We have people that came from DCAA, DCMA, former Big Four leaders like myself. And then, you know, being that this is all we do a lot of training, but we also get a lot of training. We are 100% specialized within the FAR, CAS, DFARS, and the grant regulations. And we're optimistic. Being that this is all that we do, audits are a regular occurrence for us. I know that there's an often feeling of skepticism or concern or anxiety when you get that audit notification letter, but that is what we do. We're very comfortable in dealing with audits and auditors. So I wanted to lay out our capabilities just to kind of explain or describe the depth and the breadth of our capabilities. And this is how we are kind of organized. And then within each of these capabilities, we have kind of lines of service that are tailored to exactly what our clients need. So the first one is around accounting and finance. Think of that as all of your FAR and CAS requirements and your indirect rates. So we do see a big trend right now in organizations looking at is their indirect rate structure, their CAS segment structure, and their operating model optimized to be able to take advantage of any of the regulatory updates? Or, I've seen over the last 5, 6 years that a lot of companies were very disparate and had a whole lot of segments, kind of trying to streamline that and consolidate. And then now with the NDAA and others, I think there's an ongoing question or trend in the industry of, is it right to consolidate or should we have some tailored specialized business units or segments that can take advantage of some of those regulations? Then we also have a group that is focused on contracts and supply chain, another group on DFARS business systems, and we'll talk about those business systems as we get through things. But then also enterprise systems transformation, so all your ERP implementations and other systems that enable compliance and those capabilities. And then also federal grants and strategic advisory. And that strategic advisory, again, kind of gets to helping clients through what others are thinking about as regulatory updates happen and changes are occurring. So I'm going to jump right into the regulatory overview, but I will mention as I get through any of this, if anybody does have questions, I'll try and monitor the chat. You don't have to save questions for the end. Feel free to throw them in there and I can address them. Otherwise, the next kind of 20, 30 minutes or so, we will be talking about the regulatory environment, DCAA audit trends, and then I will open it up for questions. So if you want to wait till the end, that's fine too. So from a regulatory environment perspective, this is really just kind of putting out what are all the different regulations that are out there. You have the Federal Acquisition Regulation or the FAR that you'll hear me speak to very frequently today. Think of that as the framework that provides what types of contracts are available to do work with the government, whether that be commercial contracts under FAR 12 or negotiated contracts under FAR 15, as well as cost reimbursable contracts, fixed price contracts, and lays out when those are appropriate to be used. And as we get into a little bit more detail, I'll be talking about the risk associated and how that changes across those different contracts. And then many of the agencies have their supplements, like the DoD has the Defense Federal Acquisition Regulation Supplement or the DFARS that you'll hear a lot about. And also within there, one of the key aspects of the DFARS is the business systems, and we'll talk about those 6 business systems and who has cognizance of compliance over those 6 business systems. And then the cost accounting standards. So we'll get into what types of contracts are subject to CAS at a very high level. But think of that as basically 19 standards that promulgate how costs should be allocated to government contracts to basically ensure for consistency and reliability of cost recovery on contracts. And then the items on the bottom, we probably will not get into quite as much today, just because I think a lot of this is a little bit more kind of it depends. And so we'll talk more from a regulatory perspective than a situational perspective, but happy to answer questions again, as anybody does have a specific question. One thing I'll point out on the bottom is I keep hearing people say, with all the regulatory updates and the revolutionary FAR overhaul, regulations going away. And, if you don't certify to certain things, how do you have a false claim, but you still have False Statements Act, which can still carry significant penalties. So I don't look at it at these regulatory updates as regulation is going away. At the very basic sense of it, contractors still have to demonstrate that they are responsible contractors and that the government is paying a fair and reasonable price. So there's still going to be the regulation. There's still oversight. DCAA is very much active, going through, reorganization and everything else to be able to be as proactive and as perform as value add audits as possible. So this is a slide I like to talk to and basically highlight the different types of risks associated with all the different types of contracts. So starting over on the far left, you have FAR 12 commercial contracts. So those are 100% price-based contracts. Is there a market out there that you can demonstrate that you've sold a product or service and that price is fair and reasonable? So using competition, prior sales, to demonstrate that you are a responsible contractor and that the government's paying a fair and reasonable price again. Essentially, the items off to the right, once you get past the FAR 38 GSA, that's where the government is buying items that are not needed in a commercial marketplace, and they don't have the sales history to be able to demonstrate fair and reasonable pricing. But before I jump into that, a little bit more on FAR 12, where we kind of see the biggest risk, especially what DCAA is getting involved in and DCMA, is really around the commercial item determinations and that price reasonableness. So to get a FAR 12 contract, which is what is oftentimes desirable for contractors because it does have the least amount of compliance requirements, you do have to submit or prepare a commercial item justification and then receive a commercial item determination. And what that does is it basically demonstrates that the product or service that you are selling to the government is the same or similar to other products that are sold to other organizations. Jumping one row or one column to the right on FAR 38 GSA, the one thing I'll just call out there is, it's still those commercial type products and services that are being sold. The kind of the jump in compliance requirements there really comes down to price justification, price monitoring to make sure that the government continues to pay the best price that is made available to other organizations of similar size and complexity. And then running down the middle are the FAR 15 fixed price contracts. The one distinction between the middle column and the column just to the right of that is in the middle, we have competitive solicitations or competitive awards versus on the right side of the competitive column, you have fixed price. So if you think about the FAR 15 fixed price competitive, that is still essentially price-based contracting. And so you still haven't gotten into any like cost-based contracts. And because they can do a competitive analysis to demonstrate price reasonableness, there are significantly less contract or regulatory requirements within those contracts. Now, when you start to move into FAR 15 fixed price sole source or cost reimbursable contracts, that's when we start to see a lot more regulation be introduced. And that's kind of those last two columns are where we're going to focus most of our time from an audit perspective and risk. Thinking about just some of those requirements within there, for the sole source or cost reimbursable, you are submitting certified cost or pricing data. If it is cost reimbursable, or you are basically recovering based on costs, the government requires that you go through a pre-award accounting system survey or an SF standard form or SF 1408. The key requirements in there are really the segregation of costs. So can you segregate direct from indirect costs, and can you segregate allowable from unallowable costs? Other kind of significant requirements or claims that you do have to be able to prepare are provisional billing rates or forward pricing rates and incurred cost submissions, which both of those are pretty much annual submissions on the provisional billing or forward pricing side what are your estimated rates for the year so that you can bill and price contracts or proposals appropriately as you go through the year. And then the incurred cost submission is essentially the true up of those rates at the end of the year. Now, when we move further to the right or all the way to the right, essentially kind of getting to the most complex and cumbersome type of contracts are CAS covered contracts. Those could be those fixed price sole source or cost reimbursable awards that are exceeding certain thresholds, which those thresholds are increasing pretty significantly. They have historically been 7.5 million for modified CAS coverage, which invokes a few of the standards, and then 50 million for others, or for the remaining standards to be applicable under full CAS coverage. The full CAS coverage threshold is moving to 100 million, and that takes place towards the end of July, or towards the end of June, sorry. And then I always put the OTAs or other transaction authority, other transaction agreements across the bottom. And again, that's a little bit more of an it depends scenario, just because OTAs are designed to reduce compliance requirements and kind of allow contractors to deliver more innovative products with speed. However, contracting officers do still have the ability to incorporate certain clauses and regulations within there. I know when OTAs first started coming out, there was a lot of excitement about using them, and I was helping a commercial organization enter the federal space, and they said, no, we're only going to do OTAs. We don't have to do cost. We don't have to be able to comply with certified cost or pricing data requirements. We don't have to segregate costs. But what they were providing to the government was first of its kind and had no precedent, could not demonstrate any price reasonableness. And so a lot of those requirements actually did get incorporated in there. So not to scare anybody away from OTAs, but just know that the requirements can still be pretty cumbersome when they come out on OTAs. The one thing from an audit perspective, I know DCAA, through my participation in the National Defense Industrial Association, or the NDIA, we continue to hear that DCAA really hasn't been engaged to audit a lot of activity on OTAs. And I think a lot of that does come down to contracting officers need products and services, that are innovative and need it with speed and quickly. And so, having DCAA come in and do some of those audits may be counterproductive to the objective of the contracting officer. So I'll use this slide just to talk briefly about how risk changes based on those contract types that we talked through. At a very high level, what I would really like to point out is if you think about the price-based contracts or fixed price contracts, the risk and the audit activity is primarily focused and centralized within the proposal activity. So if you are submitting a large fixed price bid, I would anticipate or expect that you would get a forward pricing audit or a pre-award or post-award proposal audit. And that's really because that's the government's opportunity to be able to validate that cost or pricing data is current, accurate, and complete at the time of negotiations. And then from there, they're really trying to make sure that you maintain schedule and quality. Whereas if you think about more of your cost reimbursable or cost type contracts, the audit activity and the risk really focuses more on how you are accumulating and reporting costs on your invoices. So you may see some more voucher audits or as you true up costs within your incurred cost submission. So this is, again, not meant to be a deep dive on the regulatory updates, but just kind of pointing out where certain of the changes are coming from and what they are so that you can be aware of them. And then happy to answer any questions about some of these changes towards the end if anybody has them. But we see a lot of changes coming from the NDAA, very notably decoupling CAS from TINA, and raising coverage thresholds, like I mentioned, on CAS for the 50 million to 100 million. It also has some change, or maybe not change, but kind of stipulating and or reinforcing the definition of non-traditional defense contractors and what regulatory requirements are applicable or not applicable to them. Another topic of regulatory updates that I wanted to cover is CAS gap harmonization. So historically, the CAS board had not had a lot of activity since the standards were created. But then looking at updates to gap and where there may be some overlap or just no longer need for certain standards, they are looking at completely eliminating in some cases certain standards, and then within other standards, for example, on capitalization and depreciation, they're eliminating those standards, but taking certain parts of those standards and placing them potentially within CAS 418 or other standards um, to address things like fair market value adjustments of assets and things like that, where the CAS board has determined that there is still a difference between CAS and GAAP. As it relates to cost impacts, there are new rules around the netting of cost impact changes and the timing of when you need to submit those changes. And then just as you think about the audit environment and contractor diligence, despite all the simplifications and the revolutionary FAR overhaul, we are seeing that audits remain stringent, requiring contractors to maintain robust disclosures and compliance readiness. You'll see at the end, I kind of close out with essentially what that mitigation looks like, and it really comes down to consistency and documentation. For DCAA audit trends, I'm going to talk just a little bit about who has cognizance over business systems, and then we'll jump into the report to Congress. But this kind of feeds into that. So if you think about the 6 business systems of purchasing, property management, earned value or EV, and then the accounting system, estimating system, and MMAS or the material management and accounting system, DCMA has cognizance over the purchasing system, property management, and earned value, while DCAA has cognizance over the accounting system, estimating system, and MMAS. In any case, when DCAA is providing an audit, they are serving as a provider of recommendations to DCMA. So DCAA is not the one that carries the warrant and can say this is the final determination or final decision. That really is the contracting officer. I will say that they typically do align with DCAA, but you do have opportunities to state why you disagree with DCAA, whether or not they had the full story and things of that sort. I did see. Okay. And if we have time, we can talk a little bit about what that process looks like, but at a very high level, as an advisor, DCAA performs the audit. Then they issue an audit report. The contractor has an opportunity to respond to that audit report, and then DCAA has an auditor response to that response, and then that creates the entire report with a recommendation to DCMA, and those recommendations can, they can say that your accounting system is adequate or is adequate with exception for, and it serves as the basis for the contracting officer to approve or disapprove a business system. The important part about, or I guess the risk around approved and disapproved business systems is payment withhold. So if you have one business system that gets disapproved, that can result in a 5% withhold on covered contracts. And if you have 2 or more, then that payment withhold can rise all the way up to 10%. Albeit the risk associated with that can be mitigated by getting an approved corrective action plan, in which case you can reduce those payment withholds down to 2.5%. But then to get it completely removed, DCAA or MA would have to come back in and validate that corrective action plan has been implemented effectively in order to reapprove your business system. As we think about the DCAA's report to Congress, for anybody that hasn't heard about the report to Congress, this is an annual report that DCAA issues, basically summarizing their audit activity and their investment and savings over the prior year. So the FY25 report to Congress came out, I believe it was towards the end of March or beginning of April. And I have a couple of just key figures here, but wanted to just make sure that everybody is aligned on kind of what these types of audits are. So included within here would be the three of the 6 business systems that were mentioned on the last slide. So accounting, MMAS, and estimating. The results of those audits are included within the systems, CAS, and TINA line. So the third line there. of the different types of audits. Um, and then the other item that is included in there, obviously with the name, are CAS compliance audits. So DCAA may initiate any type of audit under one or more of the CAS standards. Some of the standards that we see those types of audits be issued more commonly under are 401 and 402, which deal with consistency. So is the contractor consistent in how they estimate, accumulate, and report costs? And that really comes down to, especially on like fixed price contracts, did you basically estimate that you would that you would incur costs the same way that you have put them within your bid? The other common CAS audit that we see are 403 or corporate home office costs. So if you think about how corporate home office or corporate costs get allocated down to contracts, the most common finding that we see there, 403 has essentially a hierarchy of how corporate costs should be allocated down to segments. And the first priority is to allocate costs directly. So where you can directly allocate costs down to segments, you should do that. If you can't find a direct correlation of cost to benefit, then you can use a homogeneous cost allocation methodology. Most common that I talk about on that is similar to like your HR costs, so the cost of providing or managing your benefits plans, onboarding, training, all of your human resource management gets allocated down to segments commonly on headcount, or IT can be allocated down based on headcount or licenses, things of that sort. And then the last item, if you can't directly allocate and you can't find a causal beneficial relationship that makes sense, then you have your residual allocations, which is essentially, think of the C-suite, your CEO, potentially your CFO, and things like that that are really for the entire organization. And so 403 has a stipulated formula that's essentially a three-factor formula of payroll, sales, and net book value of assets. That essentially what they're saying is that creates an equitable distribution of corporate management costs down to segments. The third area that we see common findings and audits from DCAA within CAS is within 410 for your general and administrative expenses. And then the last one that I would say is probably the most common and oftentimes the most difficult to deal with are 418 issues. So that deals with logical cost groupings, the homogeneity of costs, as well as causal beneficial relationships. And I say it's the hardest sometimes to deal with because the level of causal beneficial relationship that can be driven or obtained from what is in a cost pool versus an allocation basis is very commonly subject to interpretation. And so, if a DCAA auditor interprets your causal beneficial to be weaker than an alternative causal beneficial relationship, they may be recommending an alternative allocation base that would have a potentially significant redistribution or cost impact, or redistribution of cost of contracts or cost impact. Other line items in here, incurred costs. I think I spoke a little bit about the incurred cost being an annual submission to true up your rates. Several years ago, I would say this was the hottest topic within the report to Congress, and it does still remain as DCAA's stated primary focus. But if I think back to 2015 and around that time, there was a lot of attention given to incurred costs just because DCAA was so far behind in incurred cost audits. They have caught up on their incurred cost backlog, and to my attention, most of those audits that I'm seeing are taking place over current years. The other item that I want to talk about just from a type of audit perspective are forward pricing audits. So these include those forward pricing rate proposals or provisional billing rates, but then also include pre-award proposal audits and post-award proposal audits. And real quick on that, I find it interesting, and I'll talk about this a little bit more as I explain what the audit exceptions and sustained amount and percentages are. But I do find it interesting that in 2024 they did have such a high sustainment rate or reporting that. But one nuance or different component or aspect of forward pricing in that line compared to incurred costs or CAS audits in particular is you don't typically get the opportunity to refute or remove some of those findings in those pre-award or post-award audits. They serve as a basis for negotiations to a contracting officer. So um, that sustainment rate being so high, I think also comes down to some of that, maybe that you don't go through that whole process of being able to respond to the audit and then negotiate those particular audit findings rather than negotiating a bottom line of an award. And then the last line item in there are the claims and terminations. The only thing I'll say about that at a high level really is just I would expect to see that number increasing. When I talk about what Capital Edge does, claims and terminations are something that we have always done. It's just that we're doing and helping clients with a lot more of them now because the administration's priorities and what they're doing have resulted in a lot more terminations. So if I think about the numbers within the 2025 report, DCAA basically audited $788 billion, and that was done across 2,480 audits. You can see from the numbers just within 2025, and this is consistent with other years as well, but the majority of audit activity is focused within the incurred costs. So you have $300 billion audited in incurred costs, and then you kind of significantly lower that when you start looking at, the next highest one are the systems, CAS and TINA with almost 200 billion. So the audit exceptions are essentially what DCAA identifies as their savings. So they audited 300 billion and then they questioned 1 billion within incurred costs, and 10 billion, just over 10 billion, for all of their audits. That's down 1.8 billion or so from 2024. So overall, their amount questioned did go down. Um, which is interesting. I think some of it may indicate that they have a little bit more targeted approach of what they are questioning and auditing. And I think it's a kind of a good segue into the sustained amount. So a number of years ago, I think the last report that I had seen with it was 2016 or so, the DCAA had to start reporting out their sustained question costs. So question costs are essentially they did the audit, they disagreed with how costs were claimed or questioned the costs. The sustained amount would be what the contracting officer ended up negotiating with the contract. So after you go through that whole audit process in the audit report and then negotiate the final decision with the contracting officer, that's what's in that sustained amount. So you can see for 2025 and 2024, pretty consistent, right around 48%. But a little bit more interesting when you start to look at those individual sustainment amounts by audit type. So you can see in 2024, the sustainment amount almost rose, well, over 10% for incurred costs, but then dropped on forward pricing, went up slightly on systems, CAS, and TINA, but then a very significant increase, just about 10% on the claims and terminations. A recap of this, because I do think that it shows, you can see from the dollars where DCAA is focusing their attention on how they are changing their audit approach, again, on that sustainment rate coming up significantly on incurred costs, where they are focusing. But overall, just to kind of do a quick recap on here, the overall sustainment rate held steady at around 49%, meaning half of all question costs are ultimately sustained. Forward pricing leads and exceptions at 5.4 billion, up from a billion from the prior year. And then if you think about here and from not just in the numbers, but in DCAA's report and their stated audit priorities, incurred costs continues to be their focus area. Forward pricing is also expected and continues to be a key focus area. I think that kind of comes out from their questioned and also their sustained costs in that really does is what provides them the fair and reasonable pricing on fixed price contracts as well. So kind of the bottom line on there, the report suggests, total question costs are declining, sustainment rates are holding or increasing, which from the numbers would indicate DCAA is getting more targeted and effective with their audit findings. But some of what I'm seeing in industry is where, due to the regulatory updates and changes, we are seeing a little bit of a change in how DCAA is reporting costs as questioned. One example of that, we have a client that has a long-standing practice of their allocation methodology for certain fringe costs, but then DCAA within the last year decided that that didn't have the best causal beneficial relationship and question those costs. When you have a long-standing practice and you have followed it consistently, I think that's going to be a little bit harder for them to sustain that. So while the numbers indicate that, I also am seeing kind of contrary to that as we are helping clients. I see a couple of questions. I'm going to look at these real fast. Give me a minute. First question, have I ever seen a contractor formally close out each year of a cost plus fixed fee contract instead of a formal close at the end of all years of performance? And do I have any thoughts on closing each year of performance? I personally have not seen a contract be closed out formally year by year. And actually, what I kind of see is a backlog of formal closeouts, of contract closeouts. I know that that's trying to be taken care of to actually do that formal closeout. I saw it get better when the incurred cost backlog was reduced, but I think that formal closeout process is still lagging pretty significantly across industry. And I would say the one thing on closing out each contract year, rather than waiting for full performance, is whether or not there are any changes within there that would result in any impact to total cost. So while I haven't seen it, I would probably tend to wait until a contract is to full completion prior to wrapping up. But again, that could be very situational. If there are specific reasons why you're looking to kind of close out year over year, I'd be happy to discuss that offline. And then the next question, what did I mean by audits are caught up to current years? Are low risk memos still being issued? I would say that yes, low risk memos are still being issued. I have seen more of them now than I have in the past. But again, mostly for kind of your low dollar or lower dollar, not your, if you're one of the, top 10 contractors, I'm not seeing where those low risk memos are being identified because there hasn't been a history of question costs as much as just from a materiality perspective. And then, yes, so I do see typically what I am seeing is that an incurred cost audit is being audited for the year in which it's submitted within 6 to 12 months of when it is submitted. And then the last question, has DCAA ever conducted a review of quick closeout actions in which the contracting officer determines the rates? If so, did their finding find the rates were reasonable? I don't have a ton of experience on quick closeouts. I know that they are out there and they are happening. And I would tend to say that from what I have seen, the contracting officer has accepted the rates as submitted. Otherwise, I don't think that they would try and go down that quick closeout process. Right. So this is the last slide. I'll try and cover it quickly and then open up for any questions in addition to what we just read off from the chat. But additional things that I don't think we have talked about. So if we think back to DCAA, DCMA, cognizance over the business systems, reminder that DCMA has cognizance over government property. However, DCAA has started performing government property audits in response to a GAO audit report. And I was speaking with a DCAA representative, I think last quarter or 2 quarters ago, and just talking about, if DCMA has already been doing them, why is DCAA doing it? Other than the GAO report to DCAA, one other reason is, they found that the DCMA methodology is more of a book to floor audit or review. And DCAA is now trying to do more of a floor to book, or the floor to book component is a component of what DCAA is looking at, not just book to floor, but also now floor to book. Um, the other item on the CAS non-compliances, I think I referenced this already, so I won't spend a ton of time on it. But kind of the trend that we're seeing is a little bit less collaboration and kind of working towards a decision prior to audit reports and findings being issued. And the example of that I used previously on Fringe and the causal beneficial relationship between pools and bases. And then, I've mentioned this at the very beginning as well. On the risk mitigation side, the best recommendation I can have is consistency and documentation. Essentially, making sure that you understand what are your actual and established as well as documented cost accounting practices, following those consistently and documenting them. That documentation goes for your established or documented cost accounting practices, as well as your business systems and your internal controls. Um, and then from a key trend that we're seeing across the industry right now is making sure, taking a look and saying whether or not your organization structure, your operating model, and your indirect rate structure is is right sized for any of the regulatory updates that are coming out or the regulatory changes that are coming out, and what types of products and services you are selling to the government. There's a lot of flexibility or kind of um, judgment that can go into how you organize your structure and your operating model. There are guardrails around that. So it's not the wild, wild west by any means, but there is a lot of flexibility in looking at that to say, here are certain product lines that we are selling to the government versus not selling to the government, and making decisions around that to have competitive indirect rate structures is really what I'm seeing help organizations win at the current time. So I think there's one more question in the chat. And that was the end of my slides. So I will look at this real fast. So the question is, one thing I've been thinking about is how increased regulatory scrutiny and documentation requirements can unintentionally create operational strain inside already stretched systems. From my perspective, where am I seeing the biggest continuity breakdowns happen between compliance expectations and real world operational execution, especially in high risk or mission critical environments? Um, this is a good question. Um, I I would probably go back to the example I used from a CAS perspective. So I'm going to try and answer this in a couple of different ways. But from a question cost perspective, I would go back to, why is an established practice for 10 years that has been audited? I mean, it was audited from a disclosure statement perspective, forward pricing perspective, incurred costs. Like there's multiple audits that have taken place over 10 years, and now all of a sudden you get a change in auditors, and it's no longer an acceptable practice. The strain to go through processing a non-compliance is very significant. And so to potentially throw long established practices out as non-compliant and strain an organization to take people off of their day jobs to come and put together cost impacts, go and review contract backlogs, et cetera. Um, I can see where industry would be a little bit frustrated from that perspective. And then the other part of it outside of question costs, I would say is within the business systems. And when audit leads from other audits point to potential overcharging or mischarging on contracts, I've seen where DCAA or MA may kind of over overinterpret or kind of over apply what is adequate for an approved system. And so then you are to mitigate that, then you're um, implementing redundant internal controls and things of that sort where that audit lead may the root cause of that audit lead may not actually be that business system. So those are just a couple of examples. Hopefully I did answer those questions, but any question I didn't answer fully, you can either come off mute and ask any follow-ups or put it in here, or my email and contact information is included here. Happy to have a follow-on discussion with anybody that would like. Thank you all for your time.
Thank you, Tony. That was truly exceptional presentation. I'm just seeing another question coming in here. I don't think you've had a chance to answer this. Are you still seeing DCAA contracting with CPA firm to do some audits?
Yes, so I think this is in reference to third-party audits, and yes, that is 100% still out there. We are seeing it. I think industry was very excited about that in the beginning, just because maybe they had a long-term, auditor that there may have been contention about or with, and then the opportunity to potentially bring a third-party audit firm in was good. But I think what people are also seeing is sometimes it's either, former DCAA auditors that are going to the CPA firms, or some of those are with kind of those commercial audit practices that maybe are not in line with what they've seen from DCAA. So I've seen a real mixed bag, but yes, it is still being used.
Okay, great. Any further questions? Feel free to drop them in the chat, come online, off mute. We're happy to answer them right up until the end even. But do want to thank you. Truly excellent, Tony. Great job. And I mean that. We love it when we get valuable content for the audience. And this was truly valuable. I learned a lot. Really appreciate you being here and sharing your time with us.
Yeah. Thank you all very much, and thank you for taking the time to listen today. And the questions. We don't always get questions. I appreciate it.
Yes, yes, I love that. Our Government Contractor Chat complimentary Zoom webinar series takes place the third Wednesday of each month, excluding holidays, from 12 p.m. to 1 p.m. Eastern Time. Wednesday, June 17th, we will have Jennifer Schaus, founder and president of J. Schaus and Associates, presenting GSA schedules. Is it right for my small business? To register for this webinar, you can scan the QR code on the screen now. Thank you for your time today. We hope to see you in June.